Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Today, Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, is our guest today. Jeff, as always, thanks for coming in on the Tuesday.
Great to be here, mate.
Now, before we get your insights, let's take a quick look at how markets in the region are performing, and we start with the crypto market. Now, Bitcoin is at 20,006.5. It's down 2.55%. Ethereum is at 1,089.23. It's down 5.22%. Now, looking across to regional stock markets, we've got the SGX, which is up 0.05%. However, that bucks the trend because the KLCI is down 0.39%. Shanghai is down 1.05%. The ASX All Ordinaries is down 0.06%. The Nikkei is down 1.99%. The Hang Seng is down 1.44%. And rounding up the numbers, we've got the Kospi, which is also down 1.5%. Now, Jeff, that's a sea of red there besides the SGX. Tell us why.
Yeah, I think the SGX has been saved by a combination of being closed yesterday. So it's managing to bank the rally yesterday and the sell-off today and come out about flat. The rest of it, of course, as you said, is a sea of red. A few things in play here. Clearly, the situation economically in Europe is deteriorating. There was a massive move to safety, i.e. buying of US dollars and US bonds overnight. The US non-farm payrolls figure on Friday suggests that we are absolutely going to get a 75 basis point rate hike by the Fed at the end of the week. So we saw tech stocks last night get hammered. That's very much flowed through to high correlation markets such as Japan and South Korea and Taiwan today, but also China is playing its part as well. There are increasing fears as cases rise that Chinese authorities will enact more lockdowns in Shanghai and Beijing, and that's hanging like a big black cloud over the whole region.
Now, Jeff, you alluded to the euro-dollar situation just now, and looking at the numbers, it hasn't reached parity, and it's almost reached parity. The last time that happened was in December 2002. Walk us through, and you're in the know in terms of the currency space. Walk us through when's the last time this happened prior to that, and what's the direction of the euro?
I remember that. I was running an FX desk actually when euro fell through parity, and I remember them even intervening eventually to try and lift it off the floor. So exciting times. Look, euro itself, euro US dollar pair itself broke out of a 4-decade trend line earlier this year. I did signal up. I'm not sure many people paid much attention, but that was at 108.50. And ever since then, it's been pretty much one-way traffic down towards parity. That does actually have a technical target of around 91, actually. Now, as the economic situation has deteriorated in Europe, and as we see US rates remaining firm and inflation remaining firm in the US, that has weighed on the euro, and we've seen it test as low as 1,006 this morning. It's sort of, I think there's probably some options related and exporter related bids and various structures at one. So it's going to be quite hard work to break that. But I think once it goes, it's going to go quite quickly as all that liquidity is taken out. The bounce we're seeing today is very modest. It's been confined to sort of 100.25. So it looks like a matter of when and not if. Interestingly, gold is trading tick for tick with the euro this morning as well. So if the euro goes up 10 pips, gold goes up, and as euro goes down, gold goes down. So it's looking like it's going to test 1,700 sooner than later as well.
Now, Jeff, could you kind of share some of the key things that you've highlighted in your commentary today that could move markets, particularly because we've had this long weekend in several markets in Southeast Asia?
Yeah, it's the show with everything but yield winner this week. Look, we've got the Bank of Korea tomorrow. We're expecting a half pip rate hike from them. We've got the Reserve Bank of New Zealand tomorrow. We're expecting a 0.5% rate hike from them. Bank of Canada on Thursday, that will be 75 basis points. We have US inflation coming out on Thursday night. Now, if that is above 7%, that will lock and load at 75 basis points from the FOMC at the end of the month, and we're probably going to see another risk-off move through equity markets and Asian currencies after that. Then on Friday, we have a huge data dump from China. We've got industrial production, retail sales, inflation, I think GDP, capacity utilization. It's a huge set of data being released on Friday morning that will very much set the tone for the China outlook for the second half of the year. And we're going to see some volatility around that data as well.
Now, Jeff, thank you very much for your insights and thanks for coming on the show.
A pleasure.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Please subscribe and like our various platforms. Thanks a lot for tuning in.